most traders fail not because they don't know enough, but because they know too much. Today, I'm going to show you that one setup that I trade every single day. If you master just this one thing, everything in your trading might just change. Hello, everyone. Welcome. Good to have you on board. Good to have you at the video. Let's talk about this today and let's see where we can come out and what it's all about. Interesting week, interesting times. We're a little bit early today, but okay, I'm trying something new out. And one of the new things I'm trying out today is having a vertical stream next to normal stream, and we'll see how that turns out today. I hope you all can hear me. Don't forget, trading is risky. Most traders do lose money. And if you don't like losing money and you don't like risk, you probably shouldn't be trading. For those of you who don't know me, I'm Rob. For those of you who do know me, I'm still Rob. It's still Coffee with Rob, and we're still having this show. Nothing changes. Always, always, always. Let's not spill the coffee now, shall we? Right, let's get on with it. Let's chat about the markets. Let's see what's been happening. An interesting thing happened, and that is I traded the US dollar, South African rand, and I traded Brent crude oil again. And you all know what happens when I do that. It all goes sort of south. You might be wondering what these little blockies are on the left-hand top corner here. Those little blockies, those, look, actually, if I put this down, it looks quite bright because they're on every single chart. The downside to it is you have to load it on every single chart. Now, one of the main things I heard from everyone is trying to calculate the size of your trades. Now, on TradingView, as you know, I've shown you how to do it there. Quite easy. CTrader, quite easy. Actually, on just about every single platform on Earth, it's quite easy. But on MetaTrader 5 or 4, it's quite difficult and quite complicated to work out the size of your trade. And what I've been doing over the years is calculating the size of my trades based on memory. I know what size trade I want based on what kind of risk I've got. And I've been doing it that way. But I did find a little tool which is completely free in MQL5 over here for you guys. MQL5 community. So for those of you that are on MetaTrader, go to the MQL5 community. There are free products there that you can use. Now this one is called, let's see if I can show you, Position Size Calculator Gadget. And it actually will not come out under the expert things. It will come out under Market Position Size Calculator Gadget. Very easy gadget to use. It looks like that. And then when you want to take a trade, I'll show you how to set it up in a minute. You just press, let's say, long, and you work out where your risk is going to be at 1%. You put it down there, so it's a $994 risk, and then it shows you what loss size you need to take for that risk. It's great. And I mean, really, you can just, if you want to take less risk, you just divide it by 2 or whatever the case, and then you get your information. Very, very cool little tool to use to work out the size of your trades. How do you set it up? Well, quite easily, actually. I haven't got it on this France 40, for example. So what I'll do, I'll just put it on here for you so you can see. Basically, you take the position size calculator gadget, you slide it over, and then it gives you these little settings here to set up. Very easy. You can tell it, I want 1% of equity, one risk of percent of equity, show points. You can do all those little things. You can add in whatever you want here. I've actually got my own already risk to set open, and you can just save that. You can load it, or you can save your settings and call it what you want. So actually, I've called mine risk 2, and just say okay, and it will go onto your chart, and then you can use it. It's actually a fantastic little tool. So for those of you who are looking for a tool like that, it's actually a nice little thing to have. Makes it easier for you to work with your charts. But the downside is you've got to load it on every single chart. If you go into MQL5, go into market and look for the free, and it is free, and then just download it onto your system and use it. And if you've got enough memory on your system, you can run it and it'll be fine. Okay, morning, Morgan Doug. Aussie dollar, euro, Aussie dollar for a buy. I've got the euro, Aussie dollar for a buy, but on another platform. So, but yeah, I've actually already bought it already. I think it's doing okay. I'm not sure. I must go and have a look and see how it's doing. But yeah, Euro Aussie dollar, I've already got it long, already in there. I've got that trade as well. So if you're looking at that trade, it's probably a good trade. Let's be fair. Let's be fair. So today we are focusing on that one thing, that one setup, that one trading setup. I'm going to go into that one trading setup. And then I'm also going to talk a little bit about, somewhere after that, I'm going to discuss the funded trading a little bit for those guys who need capital. There is a new thing that came out. There's a company called EIGHTCAP that approached me and asked if, we can do something together. So I was, okay, we'll have a look at it. Effectively, they've come out with a new product, which is a daily challenge. And for people who want to trade with very little money and maybe want to trade on maybe very small amounts of money, I'll show you that a bit later. It might be quite useful to you. So we'll have a look at that. And then comment, do you trade one setup or multiple setups? Because today we're talking about trading with one setup, not trading with multiple setups all the time. We have to try and, narrow it down. Hey, Blue Mango's here. How's it? Welcome. Good to see you. And I think everybody will be here very, very, very shortly. And yeah, okay. So I'm just having a look here. And my vertical screen doesn't look too bad. I got my face in the middle. That's why I put my face in the middle today, guys. So if it's in the way, sorry, but it's in the middle today, in the middle, Cyril, so that the vertical screen can also have my face in it at the end of the day. And this is something new that YouTube's come out with. So I'm just trying it out just for a bit of fun. Okay, so S&P 500. I mean, they dropped the interest rates. I was actually surprised that this didn't shoot to the moon, but it didn't. It's sort of sitting here and going nowhere. So interesting. That hasn't moved. And then US 30, similar sort of scenario. I would have thought with the interest rate changes, it would have done something slightly more interesting. Germany 40, sort of, yeah, okay, it's in a bullish run. This morning I thought it might go bearish. You'll notice I did say on Trade of the Day short because it was breaking to the downside, but I did say wait. I did say in the video, wait for the red candle to play out and close before taking any short trades. Otherwise, it could go green, give you a green candle on the inside, and carry on going to the upside, because people are looking forward to this Christmas rally. It's seasonal, and people are expecting it to come around. The thing is, this time of the year, it's interesting because a lot of the big money will sell out and go on holiday. Most of them won't leave trades in place so much, and then you'll be left with very much a lot of retail trading, a lot of newcomers coming into the market, that sort of thing. So the market tends to float up at this time of the year. So you can expect a little bit of a Christmas rally most likely, but I don't think it'll be immense or anything to that effect. People do work until the last day, by the way. They don't just go home. Bitcoin is bearish. Man, it's so bearish. I mean, I thought with Ethereum flying up, it was going to look good, but now it's hit resistance. It's hit resistance hard, and it's falling down again. It looks like it wants to come down. So I'm going to wait for it to finish its downside, and then I'll look for a long trade on that. I'm going to talk to you about why we need to trade with one setup. So for any of you who want to know what all these green and red and gray things are, I did explain it in the beginning of the video, so that you guys all know that you can now get this little tool for free on MKL5. I don't even know who owns it, to be fair, guys, and I can't even give you a link to it, but I can give you a link to EIGHTCAP, though. That's down in the description below. That's for funded trading, but I can't give you a link to this. This is, it's just there. Go and look for it. It looks like this. The actual picture looks like this, so you'll see it. Go and use it. It's actually great. I'm enjoying it. It makes life so much easier. I've been using MQL5 for, I don't know, since it came out, I suppose, many years. And I've never had the ability, the proper ability to be able to choose the size of a trade or to work out the size of a trade on it. I've always used TradingView and that sort of things for that. And yeah, now you can, with this, you can just do it. I just went and looked for it and I thought, let's just add something on that we can use and you can all use to make it a bit easier, because there's nothing worse than sitting trying to calculate it on something completely separate to the chart that you're actually working on, particularly if you're trading on even much faster time frames. I saw the trade also didn't work out so well, hit resistance coming down. Okay, let's talk about why we use one trading setup. Why do we use only one trading setup? Why do I stick to one simple trading plan? And it all boils down to confusing yourself. I started my trading career without any computers. I just had charts like this. And, well, I didn't have charts like this. I had charts drawn with a line and a pencil. And I used to draw a line through them, and that's all I had. And then computers came out, and we all got really excited about it. Especially me. I loved the thought of all these computers. It was great. Absolutely marvelous. Imagine having computers from nothing. The first thing we got when we started out actually was some floppy disks. And we put a floppy disk in, and it had a program on it, and we'd actually work with that program. That was amazing. But at the end of the day, what happened was these computers came out. They came out with all these programs. Eventually, it went live on the internet, and it was a one-click thing, and you could buy and sell, and you had leverage trading and all this fancy stuff that we've got now. Along with that came all of the indicators, all of the systems, all of the ideas. And as a trader, you're always looking for that magic pill. You're always looking for that new shiny tool because you believe there's something in the market that's going to make it easy for you to make money. And you believe that a win rate's going to make you money. So you go out looking for that shiny tool. The trouble with all traders is you add them all onto your chart. So what you end up with is a chart with an RSI on here, stochastic on here, volume indicator, an MACD. It takes up half the chart. If I was to put them all on here now, it would take up half of this chart. Then you've still got this thing on the top left, and then you start drawing lines all over the chart. It just becomes this big mishmash. So firstly, you can't see what's happening on the charts. And then you come across traders. I mean, I trade with 3 or 4 screens. And then you get these guys that have got screens all over the wall, hundreds of screens and little things. How do you know what's going on? How do you even know what's going on even if you've got no indicators? But now each chart's got a million indicators on it. So you don't know what's going on. The chart's behind all the indicators. You can't see anything, firstly. And then secondly, on top of all of that, you start questioning every single trade. In other words, you can't pull the trigger on a trade because you look at a trade and it says buy me, and then you look at another indicator and it says sell me. How confusing is that? But why do indicators do that? If all the systems in the market work, if every single system works, why do you have one indicator telling you to buy and another indicator telling you to sell or to hold on or to not to buy or whatever the case? And it's because we don't trade against charts. We trade against human beings. Human beings are what make us buy and sell in the market, not these little blockies. These blockies don't make us buy and sell. They can't predict the future. You can't predict the future. Who predicts the future is the human beings behind these little blocks. And the human beings behind these little blocks have different ideas to whether they want to sell or buy. And that's your system behind the charts. And everybody's got a system, and some are telling you to buy and some are telling you to sell. You put too many systems in place, what's going to happen to you is you're going to freeze, because you're going to look at it and say, well, can't buy that because that says don't buy and that says buy. I've seen charts with millions of lines all the way up here, hundreds and hundreds of lines. How can you possibly, if you buy off this line, you're going to get stuck on that line. If you sell off that line, you're going to get stuck on that line. And there's just no way. You're confusing the earth out of yourself and driving yourself insane. So what I do is I trade one simple way. That is, I look for my support and resistance. Now you can see this chart's quite big at the moment. Most of my charts are quite big as they start out, quite large. But what I do, I go to the day chart and I take my levels, or you can take it straight from the 4 hour. Just make your chart incredibly wide and look for your levels, okay? Look for your levels, put your levels in. Now you've got your level, bottom, top, resistance, support. Simple. Now we trade 3 ways. We trade in a trend. The trend is your friend. We trade in a range. This is your range. There's your resistance. There's your support. That's your range. And we trade breakout or counter trade, like it counters a trend. right? So those are the three ways we trade. That's it. Simple. Nothing complicated. What I might add into my trading tops is maybe a bit of liquidity pool, supply and demand. I might add that in, just see, because there's movement within those levels. And I might, on occasion, trade on an RSI, a relative strength index, because that's what the pros use. Tops, that's it. If you want to look at volume, you can from time to time check if a move is genuine or if it's a faulty move or whatever the case. You can use volume for that. Then you simply keep it simple. You simply keep it down to the simplest possible trading, because at the end of the day, what all traders need to understand is that no matter what you do when you take a trade, every single time you take that trade, you have a 50% chance of winning and you have a 50% chance of losing. You only believe different because you've drawn a line in the sand and you feel like it has to go your way because it looks good. It looks like that's the way it's supposed to go. But that doesn't necessarily mean that that's exactly what's going to happen. Now, a lot of people like to look at odds. What are the odds of the trade going in my favor? That sort of thing. And you might have better odds because of your system. You might feel that your system gives you better odds that it's going to go in your favor. Doesn't matter what your odds are. End of the day, the minute you click that button, you got a 50% chance of winning and a 50% chance of losing. End of story. Now, all you have to do is have the strategy that we talk about, and that is manage your trade. Manage your trade with that strategy. What is that strategy that I talk about all the time? That strategy's got nothing to do with charts. That strategy is simply manage your risk on every single trade. Every single trade. And then you keep the risk the same on every single trade with a view to making a profit, to making a larger profit than your losses. In other words, if you're risking $1,000 per trade, you want to be making more than $1,000 on every single trade, so that if you lose $1,000, you can at least make $1,500 or $2,000 on the next trade, leaving you in a net profit. That's the whole idea behind the trading. And that just keeps it simple. Trade with one simple system. I've been using this one simple system for about more than 20 of my 34 years of trading. The first period was kind of a nightmare. I got involved in every single system you could imagine. I made every single mistake that a trader makes. I got stuck on the never-ending cycle of doom looking for new systems. And if I hadn't done that, I probably wouldn't have stumbled across this in any event. I only started properly looking after my investment account after 10 years. I thought I could trade it, buy and sell shares within it. You know, like, oh, that doesn't look good, so I'll sell that. And I only realized after 10 years that you actually need to hold on to those shares forever and not sell them. But, you know, we're all young, we all make mistakes, and we're all fools. But when I try and tell other people that now, I understand why they sometimes don't listen, because I myself didn't listen all those years ago as well. I made all the same mistakes. But at the end of the day, follow the strategy, follow the one system that we use, keep the charts clean and easy. It'll be so much easier for you to trade. You won't have all those difficulties that you constantly have. Just remember, nothing I say here constitutes financial advice. This is just me telling you exactly what you need to do, where you need to go with your trading. And too many systems and too much stuff on the charts is going to make you insane. You're going to get confused by it. You'll notice, even if I look at an RSI, even if I take an RSI right now and I say, I want to look at an RSI, and I'll put it on my chart, I'll have a look at it and I'll say, that's my RSI. And then I'll immediately remove it. I don't want it there because it's just going to, my eye's going to look at it all the time and it's going to drag me off what my plan is and what I'm doing in the first place. Why do I look at another indicator? Sometimes I'm looking at a chart and I just can't be 100% sure if I'm right or wrong. And I just need a little bit of confirmation. And that might just be the little bit of confirmation that I might be looking for. Now, I am short on the US dollar Japanese yen, and it does look like it's going in that direction. What have we traded here? How has this been traded? Well, very simple. And that is, we have this big support line, which we would have picked up from making the charts much smaller. There's your support line. There it is. It's there. Okay. So now we know where the support on this particular product is. And then what did I do? I simply drew a trend line in with the short-term trend. It broke structure. It broke the trend. We're short. We're waiting for that to play out. Now we're waiting for a payout on that particular trade, and we shall see what happens. That's how simply you trade it. And I just need to take that out of there. I don't need it anymore. But that's how simply you take your trades. You don't need to overcomplicate things and get, wait for the moon to turn into green cheese and move 5 degrees to the left and move the earth a little bit to the side or anything like that. You simply need to take the trades, and that's how easy it gets. I find people try and overcomplicate things far too often. And it's normally because you know too much that you start making these mistakes. You become overconfident sometimes. Sometimes you just become overconfident and you start taking too many trades. If you have a winning streak, that's probably worse for than you if you have a losing streak. Because if you have a losing streak, you become more cautious. You become more cautious with your trading. You think, should I take that trade? But if you have a winning streak, you become reckless and you start taking too many trades. You've got to control yourself. You've got to stay within your lane and try and control how you take those trades. Fear and FOMO causes a lot of hassle in the markets. But keep your trades clean, keep your trades easy, and you'll start making much, much, much more profit in the markets. It's a funny old thing, the market. It really is. So let's have a chat, shall we? Saw a 2030 BTC targets between 180,000 and 2 million target for BTC by 2030. Hi Rob, hi traders, how do you set up your resistance? Thanks for sharing your knowledge and experience. How do we set up the resistance is actually a very important question. And how do we set up the resistance on a trade? Resistance and support. And here's a good example. This is Brent crude oil. And for those of you who know me well, you'll know that I trade Brent crude oil on a regular basis because I'm married to the damn thing. I'm an idiot. But okay, Brent crude oil, what I do is there's 2 ways you can do this. The one way is you can go to the day chart and take your levels off the day chart. But you don't have to. You can just take it straight off your H4 that you're trading on. But like I said, what I do is I make this much smaller. In other words, I widen the aspect of the chart. And then I look for the area where my resistance is. And our resistance is simple. It's an area where the price gets to on more than 3 occasions, and in some cases more than that. And every time it gets there, it bounces off. In other words, it's an area of interest, which means there's a lot of money lying there because every time it gets there, it pushes it down, right? Now, what you can do is what a good idea to do with a resistance is take a block and just take a level and draw it across the thickness of the area, because a resistance is not a straight line. It's an area, a block of money. So there's money in that area. Same goes for the support. Every time it hits that area, 1, 2, 3, 4 times, I could actually move this down a bit. But I'm leaving it at that level because it does like that level. That level is quite important. And you can also draw a block there as well. If you want to, you can draw the block at the bottom, give yourself a little bit more maneuverability. Say, look, there's quite a big area where there's liquidity. But that's your support and resistance. And then you can just take your block, make it a little bit bigger, move it up, work with it. Because now that's your range, that's your resistance, that's your support. This is an area that the money can lie in. You can wait for it to break through that before you trade out. You can wait for it to break through that before you trade up. So I draw straight lines in because I can see that there is an area there you've got to work with. But if you want to draw the area in, you can draw it in with those little blocks like that. Once you've drawn that in, you're trading within that area, resistance and support. Every time it bounces off that, it's going to go the other way. But just be careful. When it hits that, doesn't necessarily mean it's going to turn around. You need to wait for the red candle or the green candle at the bottom pointing upwards and closing before turning your trade around and going that way. Because what you have to understand is it's like chipping at a wall. If you chip at a wall with an axe, eventually you're going to chip through it. You're going to get through that wall and it's going to break through. And that's what we call a breakout or a breakdown. Breakout to the top, break down to the bottom. And it's the same if you're going through a trend line. So be careful of that. So you've got to wait for confirmation, wait for a good candle going the other way. What a lot of traders will tell you is wait for the retest. In other words, if it breaks, comes back, retests, and then carries on. you can do that as well, but not necessarily. I just wait for a solid candle closed, next trade going the other way. Because what will often happen is it will come to a support or a resistance, a support, say, bounce, and then what happens is they suck you in because you think, well, it should bounce there, so I'll buy there. And what it does, it just goes a little bit, comes back and goes the other way. So it's a good idea just to wait for confirmation of a good close and then going in that direction. And that's how you can draw your support and resistance lines in. You can do it on the daily, you can do it on the hourly or the H4 that you're trading on. You just got to make the chart that much wider so that you get a good picture of where the support and resistance levels are. It just helps you. And then you can also, work with the trend as well. So you can see where the trend is. You just put the trend in. If it breaks that, it's breaking structure. It's going the other way. It's going to the other side. That's how we look for the areas of trade. Okay. And then you said 2030 BTC targets. The BTC targets are an interesting one. Crypto targets, especially Bitcoin. They were predicting, a couple of weeks ago, they were predicting it to 200,000, 180,000. Like you said, I even heard someone predict 1 million. Okay. And I thought, wow, those Bitcoins going somewhere. But then what happened is, where's Bitcoin? It started coming to the downside, started falling down. And while it was falling down, suddenly all those predictions changed. I don't know if you noticed, all those predictions suddenly became, oh no, it's going to 50,000, it's going to 70,000, it's going to 60,000. Suddenly everyone predicted the end, doom and gloom. Some have even predicted that crypto is going to crash completely. The bubble's bursting, it's all over. So all those people that were predicting $200,000 are now predicting zero. And I look at that and I think, isn't that just the market for you? Just the same every single time. That's not what's going to happen, guys. What's going to happen is it's going to do what everything else does. Look, crypto is a bubble. Look, at the end of the day, I look at crypto, there's no asset value to it, so I can't tell you which way it's really going to end up. But what I can tell you is if I'm trading it, I just trade what I see. At the moment, it's bearish. It's below the resistance level. It's going down. It'll go down to 80,000. I do believe in the long run that the traders are going to try and push it up. So if I can pick it up at a good level, I probably will. I'll probably look for a decent trade out of it. Okay. So yeah, it's been interesting, hasn't it? It's been interesting. So now we're talking about how on earth you can actually focus on one strategy. How do you focus on one strategy? Because I know how it feels, to have that, looking for that never-ending cycle of doom. I know how it feels to be searching for that new trading system all the time. How do you do that? How do you get away from the boredom? How do you not sort of drop down to the 5-minute charts in the first place? It's very difficult, guys. It's very difficult to stay with your system, especially if you go on a losing streak. For example, this week, I'm losing $634 this week, so the account's a little bit down. What can I say? What can I say? That's how it goes. The one thing I can say to you, though, is withdraw your profits. Don't leave your profits lying in a brokerage account. Take them out and put them in somewhere else, your investment account, your bank account, whatever you've got. Never leave them with the brokers, because otherwise your brokerage account grows to a gargantuan size, and then the broker closes down and says, thanks, but I'm on my way. You don't want that to happen to you as well. To be careful. Not that I trust banks, but I trust them more than I trust the brokers. Let's put it that way. So yeah, that's something you've got to keep an eye on and watch out for. While we're here, there's something that I noticed that was actually quite interesting, and I thought you guys might find it quite interesting as well. I'm just going to show you this particular thing that came up that I thought might interest you guys that don't have rather large sums of funds or whatever the case. These guys approached me. EIGHTCAP came along for challenges, for day trader challenges. Might be useful to you. I have left a link for you down below if you want better deals, good deals, whatever the case. But the normal challenges are this, okay, which is these, like, the normal price, $119 for 10,000, $259 for 25,000, so on and so on. These are the normal challenges that you get. But what they've come out with is a new type of thing, which I'm still not 100% sure of how good the idea it is. But what it is choose the challenge of your choice and lock in your time limit, right? So you can choose your stake from $5 to $500, depending on how rich you are. And what it is, they give you this like 1 hour challenge, 2 hour challenge, 4 hour challenge, 8 hour challenge. I was going to take one, I didn't. And then you can choose your take from $10 all the way up, right? How much you want to trade. So let's say you choose a $10 stake. Then you multiply your payout. So you can say, I want a payout of 2 times, I want a payout of 5 times, all right? And then however you choose that, it determines how much your drawdown will be, how much your profit target will be to earn that amount of money. So if you risk $10, you want to make $50 from it. Then if you have a 2 hour challenge, you got a drawdown of $23 and a profit target of $65 in 2 hours. If you want a 4 hour challenge, you got a drawdown of $36, a profit target $102 to earn $50. And they pay you out every single day. And it gets worse the higher you go with the time frame. If you stay on the for example, 1 hour challenge, you're going to draw down a 20, a profit target of 56. So it depends how risky you are. A very interesting product, I got to say. I don't know if it's good or bad, or if it's a great idea, or if it's a bad idea, but I think for people that don't have a lot of money, because what I thought about is, okay, this is surely going to be difficult. But if you were going to trade for the day anyway on 5-minute and 1-minute charts, you're going to take those losses and profits anyway. And this is kind of a way for you to play a game and win some money, I suppose. But yeah, if you're interested in that, and there is a link in the description, these guys approached me and I said I would put it forward to you guys, but there you go. That's what it is. So have a look at it. It's EIGHTCAP. They're quite interesting. Probably you can get normal accounts there as well if you're interested in that sort of thing. But I just thought I'd put that out there so you guys can see it. Like I said to them, I'm actually quite fussy about things like that. But, you know, as I said to you guys at the beginning, last year I had no time for prop firms, but this year I kind of see them as a kind of necessary evil, something useful, something that might help some people if they don't have a lot of money to put in the market. So, you know, morning, how's it? It's an interesting concept, I must say. Very interesting concept. They're prepared to give me one to try, but I just don't have time for it myself, because I'd have to sit here for 4 hours watching charts and play with it for $50. You know, I got mega trading accounts. This is a $100,000 account. Why would I do that? But anyway, just saying, you know, if you're interested in something like that, you don't have a lot of money, because if you have to buy a huge account, it normally costs quite a bit. I mean, I think the cheapest one there was $120, right? So now you can get in for $10, and you can, you know, for $10 a day, if you do it for 5 days, that's $50, right? And you can try and turn that into $50 every day and try and hit the targets or whatever. They put some targets in place for you and what have you. And then they pay you out every day. It's a clever little thing. It's a bit of fun for the guys who want to try it out. For the guys who are into fast trading and into, you know, the lower time frames and that sort of thing, it might work. I think you can use it in the UK. In the UK, it's fine. In fact, I think you can even use it in America, but in America, you can't use it on certain platforms, so you can only use it on Trade Locker or something like that. Okay, so, you know, they got some rules and regulations and what have you. And I do understand why governments have put rules and regulations in against funded accounts, because at the end of the day, it would appear that funded accounts are on that fine line, that very fine line, you know, if you know what I mean. It's neither here nor there, you know. Is it good? Is it bad? Sort of thing. I mean, even in my mind, it's still 50-50, but I have to say that I've sort of leaned over a little bit, and I've understood that there's a necessary product here, a useful product, because with this YouTube channel, I came across so many people that don't have the capital to get into trading. And then I came across so many people that did courses and then put their real hard-earned cash into the market and lost it. I thought, well, these guys are actually really handy, because they come slot right in the middle of that. And you can pay them for a small account like that. And for example, if you lose that, let's say you took a $10 stake, you lose $10. Okay, you know, so it's not your life savings, and you can figure it out. It's real money you're playing with, but you're not losing everything. So yeah, they're a necessary evil. They're a useful tool, I think, to get in between you and your real money. So that's pretty helpful, I think, at the end of the day, for those of you who are interested in that. But yeah, like I said from the start, stick to one trading plan. Don't be going through 20 different trading plans. As I say, I call it the never-ending cycle of doom. You go round and round and round. When one system starts to fail on you, you lose 5 trades, and you think, oh, this is not working out for me. So what's the first thing you do? You go and you start looking for oaks like me on YouTube with a new system, a new strategy. Perhaps that'll work for me. And then you bring that into your trading and you put it in your trading and you think, this is good, this is going to work for me now. And then it doesn't. And then you win 5 trades and then you lose another 5 or 6 trades and you think, oh, come on. And then you try something different, until it dawns on you that at the end of the day, the charts don't make you money. At the end of the day, the charts can't predict the future. At the end of the day, these charts are not going to tell you where the market's going to go next. When you figure that out, then you realize, why am I looking for systems in the market? I need a strategy. I need a business plan. I need to work out how to make profit. And then suddenly it all dawns on you that this is, this magic pill is not there. There's no magic pill in the market. As they've always said, the market is time in the market, not timing the market. But if you can't time the market, then why are so many people trading? Well, because they're not timing the market. What they're doing is taking trades, managing the trades. You can manage the trades and then losing less on the losses, making more on the wins. And that's the way to make your profit. That's how you're going to make your profits at the end of the day. This France 40 looks very ominous. If you look at this pattern, it just catches your eye. It just looks like a giant head and shoulders developing, doesn't it? And if one index is doing that, isn't all the indexes doing that? Let's go and have a look at the Germany. What's happening on the Germany? Well, that's going straight up. There was a kind of head and shoulders that developed there, but that's broken because it's broken the shoulder and gone up. It's interesting to see. With interest rates having gone down, I would have thought this would have flown by now. Well, it is starting to go up now. It is starting to find its way up now. I think if it breaks to the upside, it might actually be quite a good buy on the S&P 500 and a few of the others as well. Where's gold going to go? Gold is really stuck in this range. No matter what silver did, gold is still stuck in this range. It's interesting, isn't it? Because if you look at silver, silver just like shot the lights out and went straight to the moon, hit that resistance, pinched the top, started to come down. Gold, on the other hand, has been stuck in this range for quite a while now, this little range here. First I thought flag pattern, but not anymore. It's just a big range now. It's just carrying on along this way in a range. So interesting what gold might be doing. Nasdaq's looking like it's going to roll over and drop 1,000. Shall we have a look at the Nasdaq and just see what it looks like? Just out of interest. But I've almost got the US 30 on here now. Let me just see here. Where shall I put you? Move you out. Yeah, let's take the France 40. I never trade the France 40. Why would I trade the France 40? That would be insane to keep trading the France 40. There's the UK 100. Yes. But I suppose it's under Nasdaq, is it? Why do they keep changing the codes on these things? See if that's it. Bit of a rollover. Interesting concept. Drop 1,000. Imagine if it drops 1,000 points. Yeah. Did I not just close that chart? Oh, man. Unbelievable. Dum 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 dum. Insane. Yeah, US Tech 100 Nasdaq. I was looking for US 100 as you saw down there. And I had it on as Tech 100 the other day. And this one, NDX, I don't know. It's normally Nasdaq, you know, NAS. They just different abbreviations all the time. It's insane. All the different companies and whatnot. I get confused sometimes when they keep changing things. It's like S&P, US 500, S&P 500, SPX 500. Just depends on the instrument. Gold. Is it XAU USD or is it gold? This Bitcoin is kind of Bitcoin, eh? Germany, the DAX, German 40, German 30. Yeah, so many different instruments. It's all about them putting instruments together. It's actually futures that are built into CFDs and whatever your contracts for the guys. And just depends which broker you're with. That's quite interesting. Okay, so we've spoken at length about why you need one system, and it is really important to stay with one particular system and not to go off on a rant and have 500 different systems on your chart. That is going to give you a hassle. It is always going to be problematic. But that said, I mean, while I trade with support and resistance, I also use patterns in the market. I also use candles in the market. Now, candles only valid for one candle further, so don't use it for all your trading, but it is good to see if you see a pincer top or you see a candle that's engulfing or something like that. Just use it in the back of your mind, and it just gives you an idea of what might be happening next. For example, sometimes you get undecided candles, you get dojis, you get hammer candles that tell you things might be turning around. Interesting to look at. And then patterns, I mean, you can download these things off the internet, a page, and they just show you all the different patterns, the head and shoulders pattern, the cup and handle, the flag patterns, the pencil, all that sort of stuff. And you can use it you can spot it in the market and just say, ooh, that could be tricky. That's going to happen, might happen next. Obviously the candles I like to use mostly just the size of the body is important. If it's a flat top, flat bottom, or if it's got tails, how length of the tails, buyers and sellers getting back into the market, engulfing candles, there's three crows. If there's three strong candles, then you've got liquidity above them. You know, candles can be useful for that sort of thing as well. The trouble with it is, you know, if you've gone through so many years like I have and so many different systems, these things, you learn them in different systems, you pick them up in different systems. So they stick to you. Now, when you're trading with one simple system, you do tend to see these pictures around that system, and that is useful to you. So I don't say to you, don't go out there and learn all the different systems, because they can be insanely useful to you at times. For example, just if you know how to work with the RSI, for example, or the MACD or the stochastic or an MACD crossover or any one of these particular different types of systems, they can come in useful for you at certain times of your career, certain times of your trading. You might just want to click onto an RSI and see where the market is, or you might just want to click onto a moving average crossover and see how things are. For example, I very frequently use the golden cross and the death cross to make a decision on whether I'm buying a share in my investment account. So if I go into my investment account and I've decided on a particular company that I'm interested in investing in or adding to or whatever the case, and I've got my reasoning behind it, I decide, let me just go and have a look at the technical aspect of this particular company and see what it shows me. What I'm going to end up is with a blank chart. And then often I'll put the 50-day and the 200-day moving average on that chart. It's a very basic system. The 50-day crosses the 200-day moving average. It's the golden cross. It means it's going up. And if it's the other way around, it's the death cross. You know that share's dead. And I'll just have a look at that and just see how far off the pace it is. And if it looks like it's heading for the golden cross and everything's in place, that might just be a good investment. But if it looks like it's dived down and it's gone through the death cross, then why would I invest? I'd look at it and think, well, technically this doesn't look very good. There must be some other reasoning behind this that maybe I don't know about or I haven't seen. And I'll use technical analysis for that. So different systems can come in useful to you in different places. All I'm saying to you is pick one system that works for you, one system that seems to be an understanding in your life and your trading and you're comfortable with, and then stick to that system and use that system until the end of time. If you do make a conscious decision to change it, have a good reason for changing it. And when I talk about system, I don't mean like, for example, if you're trading 5-minute charts, you decide, now I'm going to change, I'm going to start trading 4-hour charts now. I'm going to become a swing trader rather than a day trader. That's a completely different thing. Of course, that's a conscious decision that you make. That's something that you do. But what I'm talking about is the actual technical system that you're using to trade with, chart with. That it really doesn't matter what system you're using. They're all the same. As long as you apply the strategy, you'll be okay. So that really doesn't matter. And it also doesn't matter what kind of time frame you're trading on, whether you're a day trader, a swing trader. As long as you apply the strategy, you'll be okay. The important thing is that whatever system you're using to trade on the charts, it really doesn't matter, because you can trade with nothing on the charts. As long as you manage the trade, you'll be okay. Like I said to you before, if you take all of these trades, if there was 12 trades on the charts here, and you took 12 trades, and you said, I'm going to take all 12 of these trades. I'm going to take 12 trades now, and I'm gonna just go and buy and sell, buy and sell, buy and sell, and you choose between all those 12 trades and see what buys and sells. And let's say you lose 6 of them. And you've risked $1,000 per trade. So you've risked $12,000, but you've just lost $6,000, which is 50% of your income. And you're thinking, oh, well, that's not good. But let's say you win the other 5 or the other 6 at $1,000 each, $2,000 each instead of $1,000. I'm not saying to you have to be 2-to-1, but try and make more on your wins than your losses. But let's say it's 2-to-1. So then you make $12,000. So you lost $6,000, you made $12,000. At the end of the day, you make a $6,000 profit. So it's all about managing the trades. It's got nothing to do with the actual trade itself. It's got nothing to do with the actual system itself. What the system does for you is it makes you feel comfortable. It makes you feel like you're doing the right thing. It makes you feel like, because that happened in the past, probably happen again in the future, you feel like you've got an edge. You feel like you've got the possibility of it going in your favor, because we all want to be winners. We all want to have a win rate. We all want to be winning, not losing. So we believe that the system that we're using is good and that it's going to work. So that's important to your psychology, and that's why we have these lines and systems in place. But you can keep it simple and just take the trade and then just manage it. Even if you take the trade and then you suddenly realize you've made this gargantuan mistake by taking that trade, because you look at it and think, oh, look at that, I didn't see that. I shouldn't have taken that trade. That was a big mistake. But then you can just manage it. Just manage the trade accordingly and just see how it goes. You know, I looked at that with this US dollars at AR. I took the trade and then I thought, oh, I've made a gargantuan mistake. You know, as soon as I took it, it went down. But now I'm in the trade. Now all I'm doing is managing it to the point of I have a stop loss in place. If it reaches that, oh well, toughies. If it doesn't, I'm hoping that it will go in my direction and we'll be okay, and it'll actually play out in my favor somewhere down the line. So that's all it's about. It's all about just manage your trade. So it's a Thursday afternoon, a lovely Thursday afternoon. It's somewhere into December. I'm pretty sure there's going to be a lot of new traders coming into the market at this time of the year, because people will be going on holiday and they'll be looking for some way to make money, or maybe not go back to work next year. Be careful of that. The markets will lull you into a false sense of security. And you'll think, ooh, I can make so much money on the markets. And then you might have needed that job that you left. It's like an artist or a musician. As they master their craft, their work typically becomes simpler, not more complicated. The simpler you make it, the better. We have a question. What do you think of the US dollar CHF? Well, the US dollar CHF. Boom. Let's go and have a look at you, shall we? And it normally just goes the one way. Oh, it's not going the one way today, is it? So I'll tell you what, guys, let's show you how we mark the charts up. One simple system, nothing complicated. In fact, if I looked at this chart now, without doing anything, I would in all likelihood probably just go short and see what happens next. But of course, we want to put some sense into the chart. We want to put some knowledge into the chart and know that we're doing something accordingly. We can't just look at the chart and say, well, it's going down, so I'll sell it. That's not how we work, is it? We're human beings. We rather want to look at the chart and think, let me do something that makes sense. The best way to do that, so now what I'm going to do, what I told you earlier, I'm going to make the chart rather long. Okay, why did I have those lines there? Ooh, I must have put them there for something. Okay, right, now, this is the bottom line, obviously. So let's put it at the bottom. The bottom was way up there before, and it broke through it quite insanely. What I can see immediately from looking at the US dollar Swiss franc is it's in a range. It's most definitely in a range at the moment, and quite a long range, but it was bearish before it went into that range. So in all likelihood and all probability, this will resolve to the downside. But that's not a given, it's 50-50, but just my thought. Then we take a trend line across the top. Why am I putting my green line there? Why am I putting it in that spot? Well, if you look at this, when it came down, it hit this a couple of times. And when it went back up, it hit there, came down, hit there, came down, hit there, came down. Then it stayed below, it hit there again, came down. So it's hit there a number of times. This is a very important portion of interest. You can draw a rectangle here as well if you want to. Okay, this is an important area, a very important area. And at the bottom, 1, 2, 3, 4 touches there as well. Really important area. So that's an area where there's a lot of support money. That's an area where there's a lot of resistance money. It's not going to go up to there now. It looks like it wants to resolve to the downside. Then all you do, make it a bit bigger. Sorry if I'm going slowly, by the way, guys. I had a couple of comments of people that say, too slow, I want it, must be faster and quicker and this, that, and the other. Guys, I'm not a youngster anymore. And if you want to learn something and I'm just rushing through it so that I can make my videos more interesting and get more views and whatnot, you're not going to learn anything, are you? So it's better if I take it slowly and you get what's going on. If you're interested, you'll watch. If you're not interested, then you probably won't watch. It's pretty simple, isn't it? Okay, anyway, so this US dollar CHF is going down, like I said, and if I'd looked at it straight up, like I said to you, I would have just gone short. But now I look at it and I think, wait a minute, it's in the middle, Cyril. It's going nowhere. It's actually, there's your support, there's your resistance, and it's right in the middle. Now, what did I say to you on Tuesday? I said to you, wait for the trades to come to you. Don't chase the trades. Let the trades come to you. Once the trade arrives and it's in place, then don't hesitate. Take the trade. But right now, I would look at this and say, well, now that I've drawn a couple of lines in, I've kind of put a block on that and thought, well, maybe I shouldn't be taking this trade just yet because I'm not really sure which way it's going. My bias would be to the bearish side still, though, to the downside. But what you can do, if you really want to take the trade, is maybe just put a trend support in. Did I just put a trend support within a range? Yes, I did, because you know what? These things trend within a range. So now you've got this trend support within a range. So what's the trend support telling me? The trend support's telling me that this has come down, hit it a number of times, but every time it hits the trend support, what does it do? Turns around and goes to the upside. Look how far away it is from the trend support. Not very far, very small. So there's a good chance it's sitting on that support. Two choices here. The one choice is you wait for it to break through that. You take the short with a very bad risk to reward ratio because there's not much room down to the reward. But you could take that with a short stop loss a little bit up here. So there's that option. Or it could bounce off here, give you a nice green candle to the upside. And then you've got the long trade up to the top here with a stop loss down here. Not too bad risk to reward. That's the way I would look at the US dollar CHF as we stand right now looking at the screen. So hopefully that helps you. I don't know. Maybe, maybe not. Just my opinion. Like I say, nothing I say here constitutes financial advice. It's just what I would do. Right. Blue Mango asked where I'm thinking of getting long on BTC. Do you know what? I'm being very, how can I put it? Ambitious here. But I'm actually hoping for around 82,000, somewhere 80,000. But I don't know if we're going to get there. What I'll do with BTC, Blue Mango, is this. Okay, I'll trade what I see. So I'm actually really hoping for this 81, 82,000 down here. That would be great, wouldn't it? But I'm being very, very, very ambitious. And obviously we've got this trend lying through here at about 86, 87,000. So there's a good chance it's going to bounce off that as well. So there's two ways to look at this. The one way is I get ambitious and I wait for this to come down and give me a really nice entry lower down. Or I wait for it to break to the upside and I pay more for it and take the trade from the higher level. So I'll just trade what I see and I'll see how I go. But I would really like this to come down a little bit further because then I can actually get in somewhere in these levels down here where it breaks to the upside. This resistance is a big problem at 93,000, 93,810. That's a really, really, really big problem. This resistance doesn't want to break through that. Look how many times it's hit that level. It's refusing to break through that level. So there's two ways to look at it. Take it from the low, and then it gets to that resistance. You either get the money or you don't, and it breaks up. If it breaks through that level, you've got to take the trade at 94,000 and go. That's kind of where I am with BTC. There's a couple of ways to look at the trade. At this level, I'm not getting in. No, not at all. There's still lots of room to fall, and there's not much room to the upside. So at this level, I would wait for the breakout. But if it gets down to the 80,000, I'll definitely look at the trade. Definitely look at the trade. It's very dependent on where it lands. You can watch Ethereum as well and see what that's doing. You know, if that starts to, come closer to its levels, you might also get a decent trade in there. There was a time I thought this was going to go to like 4,800 or something, and look where it is now, back at 3,000. That's quite an interesting one as well. But yeah, for those of you who are interested in Bitcoin, I'm simply trading what I see. I'm not getting into it for any other reason. Still learning the patience of placing limit orders, scared of missing out. It's called FOMO, fear of missing out. Don't get caught up in that. Don't worry about missing out. Wait for the trades to come to you. You don't have to place limit orders. You can do it manually. So, when you see the trade, you spot the trade. You'll miss a couple as well, because very often I would have wanted to trade. I got caught up with gold so many times this year where I was just waiting for the trade, waiting for the trade, waiting for the trade. I wake up in the morning, the trade's gone. It's gone without me, during the night while I was sleeping because of some other market. That's going to happen to you on a million occasions. Just get used to it. And then random channel, how many trades would you do per week? I don't count how many trades I do per week at all. I really don't. Some weeks I'll do 5, some weeks I'll do 20, some weeks I'll do none per week. A week is 5 days. I never base my trading or my trading performance on how many trades I can do in a specific time. That's not going to make you the money. What you want to do is take good trades. Wait for the trades to come to you. When a trade comes to you, you see what you find yourself doing if you start limiting yourself to the amount of trades you take per day, per month, per hour, per week, whatever, okay, is if you don't meet that quota, if you don't meet that specific quota, so you say, I want to take 10 trades per week, and then you've taken 7 and you haven't taken 10, you haven't quite taken those 10 trades. What you're going to psychologically do is try and make up those other 3 trades as you get closer to the end of the time. And you're going to force trades. You're going to force trades just because you need to take those trades. So never give yourself a limitation on time. You'll notice I don't wear a watch. I haven't worn a watch since I was 20 years old. I've had watches in the safe that you would die to own. Beautiful watches. They're worth a fortune. I've still got a couple in the safe. Worth a fortune. Brand new. I don't wear them. I don't wear them. I don't wear watches. And nowadays, your cell phone tells you the time, which is even worse. Okay. I never used to look at the time. Now I do. Now I can look at my cell phone and, oh, it's that time. I never used to bother with it. I never limit myself to time, ever. Because what it does is stresses you out. It just gives you extra stress levels that you seriously don't need. That said, I'll always be on time for a meeting. I'll always be on time for an appointment, or if I'm catching you somewhere, I'll always be there before you. So on that front, yeah. But as far as life goes, I never put my limits on myself, ever. You know, if I see 15 trades available to me today on this market, and they're there and they've come to me and they're saying, take me, I'm a trade, I'm ready for you, I'm going to take those trades. I'm going to take those trades because they're there. And if there's no trades on the day, then I'm not going to take any trades. That's as simple as it gets. You know, the trades must either be there or they're not. So that's my answer on that question. I hope it answers your question in one way or another. I know it's a roundabout answer. I know you wanted an exact answer, but I can't give you one because I kind of don't have one. Interesting how time is a big thing for many people, but a lot of it has to do with the way the world has left us in a position of you need to pay bills at the end of the week or the end of the month, or where I found it really difficult is when I've had companies or businesses and I've had staff, and if they wanted to be paid weekly, it put a lot of extra pressure on me to make sure they got paid weekly, not only to make the money, but also to actually do the paperwork. You know, there's a lot of paperwork that comes with it, a lot of red tape. So, yeah, that's why I'm actually a much more relaxed sort of scenario where I'd rather look at trading over a year, over an annual period, and see how it goes, you know, and not have to stress about, I need the money at the end of the month or next week or whatever. That said, I don't sit with any debt or any situations like that. You know, I live with your general payments, for example, rates and taxes, electricity, those sorts of things. But as far as debt goes, I don't have that problem. So I don't have to worry about things like that, which a lot of people do. So when they are trading, you know, they're obviously worrying about how they're going to pay that bill. Maybe it's a car, maybe it's a house, maybe it's a credit card. I don't know. But all I say is maybe they're worried about how they're going to pay for that. And yeah, so they start getting desperate and taking desperate trades, which obviously leaves them in a precarious position. Let's have a look here and just draw this one in as well. This is very interesting because this should be the NASDAQ. Yeah. Okay, let's obviously make that one nice and red. It's at the bottom. The top is more precarious because you've got that top level there, but it is more here. So what I'm going to do here, I am actually going to draw a little bit of a block in here. Give you more scope on that. Right. See what that looks like overall. Suddenly the perspective changes on the NASDAQ simply because I drew in a resistance and a support. Amazing, isn't it? Suddenly the whole perspective changes on it. But it is sort of falling over. It looks like it wants to fall over. Looks like it wants to roll over, but it's hit resistance. It's hit resistance a couple of times, but there's something noticeable here, and that's a double top. Look at that. There's a double top developed up there. So good chance that that could cause a few little problems in the near future. Looks like it's breaking to the downside. So yeah, this is going to come down, and it's probably going to come down to 24,000. So that's actually quite interesting though, because with interest rates being cut, this came down yesterday, even though that happened. So it looks like Oracle is a problem or something like that. Maybe that's going to cause a hassle in the market. Maybe there's going to be some pain. We shall see. I learned that in the army, I wore a watch one day and it made me so impatient. Last time wearing a watch for time, just fashion. Many times they are dies. Yeah, I think that was actually one of the reasons I stopped wearing a watch, is because I was also in the army and a couple of years, and I not only was it a pain, but also it would probably get damaged anyway or whatever the case. So I just didn't bother with it. What do you think of the bigger brother, smaller brother principle of supply and demand? I don't deal in big brothers and small brothers, but supply and demand works. I use supply and demand to sort of back up my trading. So supply and demand is a liquidity area. That's all it is. So, when you're looking at supply and demand, what you're looking for is an area where, for example, there was 3 big red candles down there and a green candle before that, which makes that area at the top there a big supply of money, right? So it hasn't actually taken that money yet, by the way. So if you wanted to draw that in, it's quite a biggie. It's a real biggie. Look at that. All the way along there is an area of money, liquidity. And you can pick up that money and it's right on the resistance. You'll find quite often they give you some confluence. So yeah, it can be useful in between on levels. For example, if you're looking for levels, for example, here, this would be a demand of money in the middle here. But don't confuse yourself too much with supply and demand and putting them in the middle here, because what actually happens is you find yourself once again, like I said at the beginning here, trade with one simple system. Don't get out of the norm, because you start adding these extra things in. And I do it naturally because I've traded with all these different systems in my career. And because I know about them, I kind of look at them, and you probably shouldn't. Because what actually happens is now you draw that in and you think, oh, well, suddenly my whole plan goes to hell because it looked great. And now I put that in the middle and it's just like throwing a big spanner in the works, hasn't it? It stopped me from trading further. So watch out for that. Watch out for that scenario of adding too much into your trading. But I mean, for example, now you could add this in here because there's a demand of money right there, for example, right? So now you're looking at this trade and thinking, Well, it could come down and take that money and go up, but now you've got your trend in place, and you've got your main resistance, your main support. You've got another supply of money up here. It starts becoming overwhelming and too much going on. It's good to use it. It's great to use it. It's great to see it, but it can start putting too many spanners in the place. And it might be good, like I said, before this particular video. I mean, this whole video was based on the whole story of focusing on one proven strategy. And what are we doing now? We're adding like 25 different strategies into the chart, and we're starting to like overdo it. So I'm a big fan of liquidity areas, because anything that shows liquidity areas is useful, because that's what we're about. As a trader, what's your job as a trader? As a trader, you need to look for liquidity. You need to look for that money. And if you can find that money in these charts, then you're going to take that money because you're going to run with it, right? So that's what your whole being is about, looking for liquidity, not for following charts around. It's you're looking for the money. You're looking for the money. Where's the money? And the money is in the areas where the charts move around. So, you know, I'm a big fan of support and resistance. I use it in the background a lot. And I've got videos on it. I've shown you, I've got a couple of videos on how to trade with the support and resistance and that sort of thing. But big brother, little brother things, I don't deal with that. Not into extra little things like that. Too many things going around at the moment, too many extras. I even did a video on the ghost candle, but I've never actually traded with it. Too many little funny things going on. I wear a watch for working out. Hey, carry our cell phones on runs. Now you got to get the watch for the runs, the Apple Watch. My kids have all got the Apple Watch, and they show me up when we go to the shops, because I still take out my card, okay? I don't pay with a phone. I take out the card, and I pay with a card, and the kids just go with their watch. You know, look at me, Dad, pay with a watch, you know? So I got a long way to go on that one, but I can use the phone if I want to, but I don't want to. I still like the idea of taking a card and paying. It makes me feel secure. I don't know. Yeah, I suppose 30 years ago that wouldn't have been either, but anyway, just makes me feel better. But yeah, certainly. These days it's all the Apple Watch, and then it measures where you go and where you walk and all the rest of it. It's like here in South Africa, the medical aid that I'm on gives you a thing called Vitality. So if you walk a certain distance, run a certain distance, do exercise, whatever, it picks it up on your cell phone. You can have the watch as well, by the way, and it gives you money back for that, or points for that, or whatever the case. So that as well. Insane, isn't it? Crazy stuff. Absolutely crazy stuff. So everywhere you go, you got to carry the phone around with you. And I'm one of those guys who would quite happily just leave the phone on my desk and go somewhere, come back. But then it hasn't picked up all that exercise that you did, so you're not getting the points back. So now you're forced to take the phone with you unless you get the watch. And then I don't like wearing a watch, so now it gets confusing, doesn't it? I guess it's just what happens when you're older. Hi Rob, you've seen the chats in Telegram with SLA regarding seasonality, and I know you've mentioned it in the live streams before. Do you look at seasonality before putting on a trade? We should all pay with cash so they cannot take it from us. They're going to take the cash from us. That I can guarantee you. They're going to take the cash from us. Everything's going to be a digital currency. We'll go into that in a second. Blue Mango asked if you, about the seasonality. Now, be very careful of getting caught up in seasonality. I see SLA is getting very caught up in seasonality, and there's nothing wrong with that. There are traders that trade solely on seasonality because, you know, percentages in your favor. And, you know, there's a few sayings in the market. For example, there's the Christmas rally, there's sell in May and go away, and there's a number of different ones, okay? And what it implies is every time it gets to that point, this is going to happen. Now ask yourself the question, why is it that every time it gets to that point, that happens. Why does it happen? And the understanding behind it is this, is because at that point, when it happens, money's moving around, okay? And there's certain things that happen in the world that cause that money to move around. Maybe it's something to do with the Reserve Bank moving money to the banks, or the Reserve Bank paying the army, or, there's all kinds of things that go on in the background. That money moving around causes that seasonality. That causes the markets to move up and down in general. What you've got to be careful of with seasonality, and I have been caught out by it myself, is it doesn't always occur. It's not 100% factor, but there will be odds on in your favor. For example, because it happens 70% of the time, then you've got a 7 out of 10 chance. It'll probably work in your favor if you're following seasonality. But seasonality can also go wrong, and seasonality can get scuttled by things that happen that are different in the market. You see, because things change in the world. Presidents change. So, for example, Trump coming into power and changing everything this year has been quite complicated for a lot of people, and it changes the seasonality. I noticed, for example, the sell in May and go away has moved and changed. It's not quite what it used to be. The movements around gold have changed. Now, so be careful of seasonality in the sense that it's not always right. It's a difficult one. It's a really difficult one, because certain things need to fall in place for that seasonality to work out. And you're kind of trading blind into it. It can work. I don't say that it doesn't. It's a system, and you can use that system, but don't get caught up in that system. For example, the Christmas rally doesn't always take off on exactly the same day. So which day is it going to go? And it doesn't always work out. Sometimes it fails dismally. Seasonality is an interesting one. It's a very interesting one, because I have noticed that while it can work at times, many times if you get too caught up in it, it's going to let you down. But yeah, I don't see a problem with doing it. I don't bother too much with it. There are a couple of big ones that I keep an eye out for. For example, the Christmas rally, the sell in May and go away, and those types of things. There's a couple out there that I keep my eye on, that I know there might be some issues here. But further than that, you can go back and do your own homework, for example, and you can look at the S&P 500 for the last 100 years, maybe the last 100 weeks, I don't know. And you can see that every January it does this, and every February it does that, and how many times has it done that on how many different days, and that sort of thing. And you can use that. You can use that kind of homework to your advantage, and see if it's going to happen again. You must remember what you're trying to do. You say that, just like with charts, because that's what charts are for. What do we use charts for? We use charts to tell us that what happened in the past will in all likely going to happen again in the future. And that's what seasonality is. Seasonality is exactly that. It's saying to you, well, what happened in the past is going to happen again next time. So it should happen again. Charts do that all the time. You look at it and you say, well, that happened before, it should happen again. That's all it is. And that's, if you're trading seasonality, remember this, then you're no longer trading 4-hour charts. Now you're trading a weekly, more investment type scenario, seasonality. Then you're kind of like looking at a much bigger, much longer picture as well. Because seasonality is a season, right? Season is a couple of weeks. It's not 4 hours or a day. You're trading on a much bigger picture. Pretty Sir Lunch is not here, but I like what he's doing. I like that he's looking at the seasonality, but you've got to understand that that's got to be a much bigger picture, a much bigger trade, a much longer trade. You're not trading on 4 hours there, because if you're trading on 4 hours, look at it this way. If you've got a seasonality, okay, so now you're saying, let's say every December the market goes up And we know that every December the market's going to go up. It's a bit like the VIX trade. You know it's going to go up at some stage, so you take the trade anyway. So now December comes along, you know the trade's going to go up, so you take the trade. But you take it on a 4-hour chart, you make a profit, it starts to turn around, you get out of the trade after 2 days, and you've made the profit. But it's seasonality. In other words, you should have stayed in the trade for the whole month, because you would have taken profit for the whole month. But you've gotten out after 2 days because you've made your profit. So you've got to look at the whole picture a completely different way if you're going to trade on seasonality. So while I agree with it, and I don't disagree with it, and I think it's nothing wrong with it, it's a system like any other, and all the systems work. All I say is you can incorporate it into your trading if you want to, but don't get sucked into it. It doesn't work all the time. It's just something out there. You know, you get this surrounding thing that's happening. So if the thing that's supposed to happen doesn't happen, then the seasonality is not there. Trump has messed up seasonality in a lot of markets. You see that exactly what I say is what was seasonal is no longer seasonal because someone's come and changed the rules. Because everything that's seasonal happens because something happens on a regular basis. But like wearing a watch, you have that timed thing. It happens all the time. It's always going to happen. It happens the same every single time. And then suddenly it's not happening because someone changed something. Something didn't happen in the markets. And suddenly all those seasons either don't happen or they get moved to a different season for some odd reason. It is difficult. It's careful. It's like also, you know, another thing that would fall into seasonality is, for example, the one thing that I know is that around every 10 years, maybe you don't know this, but around every 10 years, there's a crash. You have a crash, 10 years go by, you have another crash, 10 years go by, you have another crash. Go look back for yourself. But recently, that changed. And it wasn't 10 years, it was like 11 years or 12 years, okay? So in other words, it doesn't always happen bang on. It happens close to it, but not bang on. So you're expecting it right at that point, and then it skips over that, and you think, oh, that's not happening. Maybe it's changed. And then suddenly, boom, there it goes. It was close, but it's not quite exact. So it's very difficult to pinpoint seasonality right down to the point. You can sort of get a sort of cloudy picture of it, but to get the exact point is tricky. What I do know is when we're getting closer to the, for example, 10-year period after the last crash, then I'm kind of like cautious. I'm thinking, well, we're close to the 10 years now. We're going into the 10th year. Let's just see what's going to happen now. Where are we? How does the markets look? You know, how are we looking here? Is this a good thing? And that doesn't mean that they're not going to happen somewhere in between as well. Doesn't mean you're not going to get a crash somewhere between the 0 and 10 years. You might get one at 5 years and then you're surprised. Why did that happen? It's only supposed to happen after 10 years. So suddenly your brain is telling you that it can only happen every 10 years and then it happens after 5 or 6 years. What happened? You know, be careful of that as well. Your brain gets stuck on things. So for example, sell in May and go away. You're expecting it to sell in May and then it starts selling on the 1st of April and you're like, what? That wasn't supposed to happen. Yeah, that's why I like just trading the normal way. It's just a bit easier. Jojo has to go. Thank you so much for your the rest of back later. Good to have you. See you next time. Don't forget Tuesday 1100 GMT +2, and I'll see you there hopefully. Cheers. Keep well. It has been a bit of a slower day anyway. I don't see a lot of concurrent viewers today like we had on Tuesday. It was a lot more on Tuesday, but maybe the subject matter was that much better on Tuesday. Today I'm just talking about the one system, and Tuesday I was talking about fear and psychology. Ooh. Also, this is a much later show. I'm actually thinking that maybe the Thursday show should be earlier as well. I might change things around. a little bit. We'll see. We'll see, because I put the Thursday show out very much for the certain markets like American market and that sort of thing, but it's been kind of quiet. For those guys who have missed me talking about focusing on one proven strategy, that's at the beginning of the video. So if you're watching at this point, you got to go all the way back to the beginning to see that. So yeah, that could be interesting. See how that goes. Yeah. Euro Aussie dollar, is that the one? Which one did I trade? Euro Aussie dollar. Euro Aussie dollar. Wonder how that one's going. And that one is on. Okay, I'm not going to open that now because it might slow everything down. Yeah, America's opening very late these days, and it's unfortunate, but I might move the show on the Thursday for a while, and then when it comes back to the normal time, I'll move it back again. But it does open quite late there, according to our time, so it's very difficult to catch those guys. So I might just make the show more European. More European-like. Silver had an amazing pop this week, but I actually tried to catch the short on it, and I actually fell dismally, but it's okay. But look at this. Look at that pincer top there now, Daniel. There's a big pincer top here, and that looks like it wants to fall down, but I'd wait for it to break through the support now before I try to do anything. But it's on that pincer top. It's right there. I just want to see, why did I draw that line in? Was there any reason? No, I just drew it in. Okay. That's an all-time high, I suppose. But it's interesting that silver popped so much with gold just sitting in this range, stuck in this range, going nowhere, while silver's really popped out. So yeah, it's actually quite interesting that silver did that. Farney, how's it? Good to see you. I would have thought with silver popping up, the gold would have popped up as well. But now with silver hitting a pincer top and starting to probably come down, relax a bit, I'm wondering if gold is now going to stay in this little range, or if it's actually going to pop up or pop down. But if silver pops down, it probably will pop down. That's a bit of an interesting one, to be fair. Okay, so, and BTC is going nowhere as well. Nowhere fast. Absolutely nowhere fast. Finally, did you miss the Tuesday show? The Tuesday show was hot stuff, man. I was talking about all fears and FOMOs and psychologies and all that. I was becoming a psychologist, and now today I'm just normal old Rob again. But good to see you. Yeah, I love having these shows. Love chatting to you guys. There's an $80 top on that one. Bom, 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 bom. Very interesting to see. I really would like Bitcoin to come down a little bit more so we can get a decent run on that one. I don't want to buy it now. For those of you who don't know what this long short reset thing is that I put in here, I put it in here because you guys wanted to know on MetaTrader how you can choose your size, how you can choose your trade size. It's I showed you at the beginning of the video. I'll just show you again. It's a total free thing on MQ. If you go here to the MQL community, okay, you can get this, what's it called? Position size calculator gadget. Looks like that. And it's a lovely little tool to calculate your position size. So if you want to calculate your position size, you can put your stop loss in place, and you can put your take profit in place, and it'll show you what your profit will be show you what your risk will be if you took a trade now, and it'll show you what lot size you need to take if you're putting that risk in. And I mean, really, if you don't want to take when you put the thing on, you just tell it you want 1% or 2% or whatever risk in that little thing, and you save it, and you just put that on every chart. The downside is you've got to put it on every chart. But like, for example, let's say you didn't want to risk $1,000, you want to risk $500, you just divide the lot size by 2. So that becomes 0.5 instead of 1.1. Then you're risking $400 and something instead of $1,000. And if you want to only risk $200, then you could say 0.2 or something like that. So it's easy. It's a nice little tool to work with, and it's free. I was looking for a tool that you guys could use on your charts on MetaTrader as well as all these other things, because TradingView is easy and CTrade is easy. All these other ones are easy, but a lot of brokers will only give you MetaTrader 5 or MetaTrader 4 or whatever the case. And I've been using MetaTrader for years, and on that MetaTrader, I've always just had to work it out for myself. And I've never really bothered to look for a tool like that, but you guys were asking, so I thought, well, let me look for a tool and see if there is one for free. And it's a free tool. You just type in free under the marketplace and you get that, and it actually works quite well. So go for it. It doesn't buy or sell anything like that. It just tells you what size trade. That's all you want. So you look at it and say, what size trade do I want here? You can work out your risk, everything. Oh, that's the size of the trade, and you can just take the trade. So much easier. It's actually great. Don't have to sit and calculate it all out and work out how much per point and all that rubbish. And no matter what broker you're working with, because you've got different brokers that you can put onto your MetaTrader, for example, and each broker is giving you different trade sizes. So now you've got to remember which one's which and all the rest of it. So it's so much easier if you've got more than one broker to have something like that on your charts. The downside, like I say, is you've got to add it to every single chart. It's easy to add it though, guys. Really easy to add it. Control N, and it gives you your position size calculator gadget. You'll find it under market. It's not under the experts. And then you just slide it across. And then when it's here, it asks you all the questions. I've already got it at 1% of risk equity. You can add default stop losses, whatever. You can add all kinds of things into here. You can work it out for yourself. And I just load my own preset that I've saved, which is that one. I put it in and just say, okay, and it's in there just like that. Control N, that goes out, and then you've got it on. It's on the chart. And if I want to take a trade here, I want to take a short trade, I can work out where my stop loss is, and it'll tell me, oh, there's your stop loss for $1,000. There's your take profit. You'll make $2,000. That's your trade, okay? And you can just say buy or sell or whatever you want to do. And it works quite well. It is annoying having that there, I must say, but you just live with it. So now you know what that's for. What's the S&P 500 doing at the moment? Okay. It is a bit annoying that America opens so late in comparison to us, but you know, what can you do? Let's actually speak to America and tell them to move their time so that South Africa can be at the same time as them. Not that they're so proud of South Africa at the moment. They're not even happy with the government as it stands. So. Yeah, Tuesday there was a lot more people in the live show. And I think maybe I must move the times and don't worry about the other market, because it does appear that it's more popular on Tuesday. And so it's obviously the time. So I might look at that, because it's obviously the group that we have is more into that time. So I think I might just change it around a bit. Barney's been totally tied down for the last 2 weeks. Well, the bad news for South Africa, Daniel, is very interesting. And I must say, I'm actually so surprised with the US dollars that they are. Because once again, do you know what? I took the long trade here, which means the South African rand should be getting weaker. Because that's what I believe it should be doing. But it's getting stronger. And I'm like, why is that? How can that even be? Sometimes that's what happens to you in trading. But so yeah, but the Algoa thing, it's embarrassing for the South African government, I must say. They're even giving Zimbabwe money, and they're not giving South Africa money because South Africa are bad. So, but I understand where they're coming from, okay? because what's actually happened is they were giving us handouts. The West is giving us handouts. America, UK, Germany, they're giving us handouts, right? And saying, here, we'll help you. We'll help you along the way. No problem. Here's some dosh. Keep yourself alive, as they're doing with all the other countries up north, okay? But what do? What does our government do? They take sides. And they support Palestine, and they support China, and they support Russia, and they say, screw the West. And then what happens? The West says, why should we give you any money? Why should we support you? You guys are supporting them. So why didn't they just stay out of it? Why didn't they just not get involved whatsoever? It's got nothing to do with us at all. We should have just like, okay, you know, whatever's happening in the world is happening. We're neutral, like Switzerland used to be, you know, we're neutral. We don't get involved in these things. But no, we have to put our point across and shoot ourselves in the foot. And then not only that, then they throw in the BEE and all that stuff, and then they have farm murders and racism and all the rest of it going on in the country, which I shouldn't even be talking about. And you know, they expect these guys to just keep on throwing the money here. So I think what's actually happening in the world at the moment is the world wants a restructure of the South African government. In other words, they want someone else in power. They don't want the people that are there at the moment because they're not friendly to them. So they're looking to change that. And the best way to do that is to take all their money away, because they love their Lamborghinis and Ferraris and all the money and whatnot, money in the couch and whatever else. So what they're going to do, take all their money away and give it to someone else, and let someone else go into power. And that's going to happen. And as far as politics go, and I'm not into politics and all that kind of stuff, but that's what I can see happening. You can clearly see what's going down. You can clearly see that the rest of the world is taking their sweeties away and giving them to someone else, and they're going to put someone else in power in South Africa. That's the power of the world that our little governments don't understand. There's more to this than meets the eye. You think, oh no, I'm super powerful because I'm in charge of South Africa. Well, not for long, because somebody's going to come along and take it all away from you and move it on to somebody else. And that I can almost guarantee you guys, better than I can call trading, I can certainly call it we're going to have a new government one day soon. And it'll be a surprise, because the money is getting filtered off to someone else. Did you know that the ANC, who's running our country at the moment, cannot even pay their staff? There's a big news article at the moment. They can't even pay the staff that they have because they don't have the money to pay them. It's all been used up, gone, whatever. It's nowhere to be found. So that's going to be a problem on its own, because people are not getting paid aren't too happy now, are they? You see, previously, people were giving money and helping people out. And you see, political parties are run on handouts. And who gives the handouts? Big business. Big business gives the handouts because big business wants to be recognized by the government. And the minute the government stops recognizing big business and stops helping them out and starts putting things in place to make it more difficult for them, and not just big business, the whole world, then they'll be removed because they want somebody else in there that's more conducive to what they need, which is why I'm surprised about the South African Rand being so strong. Yeah, Daniel, I think the only thing that can be possibly happening with the South African Rand is the US dollar is just getting so weak. Yeah. But yeah, no, the politics are it's a touchy subject for everyone, and we do have to be, realistic as well. But I think that this government in South Africa has been voted in based on a past history of being the saviors of the country at the time, or whatever the case. Okay, the revolution, whatever the situation, but you can't live on your coattails forever. You can't live on that history forever, because you have to do something. You have to do something for the country. You have to do something, you know, to make it better. You got to help the people get education. You know, the hospitals is one of the most insane things. Why is it always the poor who suffer the most? For example, if you have a medical aid, you can go to a private hospital, you can be okay, you can come out of it in one piece. But if you don't, you end up in a government hospital and you die. Because during the period when we had the big disease around the world, they gave South Africa something like 550 billion, which just disappeared again. It was mismanaged. Do you know what they could have done for the health system with that money? And it would have helped the poor, and it would help the people that needed to go to those hospitals. Now these hospitals are like falling apart. They've got no money. They don't have any money to put in the health system. It's falling to pieces. You know, and then who suffers? The poor people again. They don't have anything. They're the ones struggling. We've got a more than 60% unemployment rate in our country. People are unemployed. People are starving. They don't care because they're driving around in their Mercedes Benzes and Lamborghinis. They don't care. But the people think they care because those people keep on voting for them. But they keep on voting for them because they don't know any different. They don't understand that they need to change. But there is new awareness coming about. And I do believe that that's why they didn't want to educate the people. That's why they didn't spend on educating the people, is because the more educated people become, the more they realize what's being done to them. And that's what's going to change now, because there is a lot of educated people now that are starting to see the difference and starting to see who these people are for what they are. And there will be some change. I'm pretty sure of it. Pretty sure of it in the near future. Yeah, look, it's difficult to say. The world has changed, but you know, it's a question of who do you want in power. And I think what the South African government has also underestimated is the importance of that Cape Town sea route, that Cape Sea route. That is so important. And I do believe that the world wants it. They don't want to lose it. So they're not going to just let it go. So yeah, they do care about it. A lot of people say, I don't care about South Africa. You're just a little country. No, they care. They care. They're not just going to let that just go by the wayside. That's for sure. That would be silly, wouldn't it? So there's a lot that plays into that. And yeah, there's going to be changes. But like I say, I'm really surprised about the South African rand. I cannot believe that is actually so strong as we stand at the moment. Yeah, what can I say? What can I say? This is the Euro US dollar, and I think SLA took the Euro US dollar long, and it is actually going long. It's quite good. Really decent, really decent. Fear and FOMO destroys traders. Fear and FOMO. Fear and FOMO is probably the worst thing that's going to destroy a trader. If you're a beginner, why do you get started on 5-minute charts? Why do you start trading on 5-minute charts? Because it's so fast and so quick and so overbearing. And how do you keep up? You know, if you're a beginner, start on the, don't even go to the 4-hour. Go to the day. Trade on a daily basis. Don't even trade on the 4-hour. Trade on the day. Take your time. Learn how to trade. Go slow. Don't jump into the 5-minute charts and it's going up and down and try and make money quickly. Go slow. Start on the day. In fact, start on the weekly. Take it really slow. Gosh, I must have left those things in black a long time ago. Doesn't matter. You know, go a bit slower. You don't have to rush things. And then let the trades come to you. Don't push it. Don't be in a rush. It's not going to help you. You're not going to make the money that way. Will the S&P go up today or will it go down? Question is asked. Which way is it going to go? If it goes past that prior high. It's long. If you get a red candle off here, probably going short again. It's an interesting one. No, you definitely can't have another Somalia at the tip of Africa. That's going to be a problem. Yeah. But I probably said too much already. You know, the thing is, I don't want to sound like I'm insulting one side or one particular type of person or religion, or but you know, you got to stay neutral. You as a country, you can't take sides. You can't support this and not that. And then expect them to give you money. And you can't do that. It just doesn't make sense. Yeah, the Fed dropped the interest rates and this went nowhere. Isn't that interesting? Absolutely interesting. Okay, you had a bit of a green candle, I get that. But the rest of it is just a drop-off. It's done nothing. It's just in a straight line. I mean, they dropped the interest rates. Was it expected? I mean, people were expecting no interest rate hike. It's done nothing. So, yeah, there was a bit of bad news from Oracle or something like that yesterday. So that might have affected things in quite a negative way. But if you look at this, it's literally gone nowhere and done nothing. So that kind of says to me that the market should be going up. We should be getting our Christmas rally. We should be buying the S&P 500. But nothing's happening. So I don't see a lot of orders going in for the buy just yet. But let's just see if we do go long on this. Where are we going to put the risk? Put the risk. I mean, where are you going to put the risk? You're going to have to put the risk around about there. Take profit. Now, you're not going to get a lot of risk to reward on it. As you're targeting 7,000 for Christmas rally, and you're risking down here at, yeah, basically just a level that's safe, which is 6,760. So yeah, it is an interesting one. An interesting one to take note of. I'll decide later. If you can't cook a decent meal between bars, you're trading too short term. If you can't cook a decent meal between bars, you're trading too short term. Okay. Yeah. You know, too many people are trading too quick, too short, especially new traders. And I think it's one of the biggest mistakes in the market. It really is. It's one of the worst mistakes you can make. And I really think that new traders should be much more careful when they get into trading, you know. Anyway, guys, it's getting quite late. Thanks for joining me today. Remember, you don't need 20 setups to be a consistent trader. You just need one that you fully understand and you can execute with discipline. Okay, so guys, I'd hope you've hit the like button and subscribed, and trade smart, stay patient. Because it is time for me to actually move on. EIGHTCAP Pepsi is short the NASDAQ futures. So there's that. If you short the NASDAQ, then you should be short the S&P 500, then you should be short the others as well. If the NASDAQ goes down, the S&P is going to go down as well. The reason the NASDAQ would go down is probably because of Oracle. But guys, I want to thank you for being here. I want to thank you for watching. It's been a quiet show, but that's okay. Sometimes we're going to have quiet shows. We're not always going to be busy. But I will see you back here on Tuesday. Tuesday we'll be busy again. And I think next week what I'll do, I'll make the Thursday show a little bit earlier, maybe a couple of hours earlier, so that we can get everybody on board again. And I think we'll just stick with the Tuesday times because the Thursday times are a little bit slower. And we'll go with that. Okay, so with that, guys, thanks for watching. Thanks for being here. And Make lots of money, make lots of profit, enjoy your weekend. Don't forget to join us for the members videos in the show below. Just join, it's below the video. And subscribe. I'll see you next time. Thanks. Cheers, guys. Keep well.